Welcome to Talk ETFs, ETF.com's weekly video series. My name's Sumit Roy, and I'm Senior Analyst for ETF.com. This week, I'm talking with Stuart Barton, who is the co-founder and CIO of Volatility Shares. Stuart, great to have you on the show.
Thank you for having me.
So Stuart, if I'm not mistaken, you're first in line to launch an Ether futures ETF. This kind of came all of a sudden and out of the blue. A lot of people didn't expect Ether futures ETFs to get approval anytime soon. Why do you think the SEC might approve this type of product after denying them for so many years?
First of all, obviously, presently it's just a filing. It's clearly not being scrutinized by the SEC yet. So we'll go through that process over the next couple of months with the SEC. Reasons for us to believe that it may come to market is simply similar to the argument I've made about the 2 times Bitcoin. And that is, really, why not? There's a lot more in common, or Ether futures have a lot more in common with Bitcoin futures than, a lot of the other tokens and coins. So, I think our view is, well, there are regulated, or there are liquid futures trading on Ether, and these futures are traded on regulated markets. It doesn't seem to be too far an intellectual leap to say, well, can we then package those and structure those in the same way as other futures-based ETFs? And I think that, perhaps the outstanding questions are things around, is Ether an unregulated security or something like this? And I think, those are discussions we will be having with the SEC in the coming weeks. But I think, given the similarities with products that already exist, I think there's a very reasonable chance that we see this launched.
What are your thoughts on crypto long term? And specifically, how do you see Volatility Shares being positioned in this space? What are your ambitions when it comes to crypto over the long term?
Volatility Shares was started as a ETF provider that's in the volatility space. So we have 3 actually interesting products that are kind of linked to the VIX, and that was our history. We then sort of looked around for other opportunities and realized the reality is our skill set is probably in structuring innovative exposures that maybe others have overlooked or maybe others don't know how to produce. So that's what drew us to the crypto space. And in our view, we're part of the bringing crypto into the formalized financial markets. And I think that's an important job. Someone really has to do it. Maybe some of the big asset managers don't want to be at that sort of bleeding edge. They may want to wait and see how it evolves a little bit. Whereas a younger firm like ourselves, are keen to do that. So in terms of, how we'll move forward, I think we'll continue to look for these sort of innovative, edgy exposures and see what we can negotiate with regulators and see what the demand is for them. Some of those may be in crypto. We're in discussions at the moment about looking at the spot space. I think there's a very interesting problem that existing in the spot ETF race, and that is everybody seems to have brought the same sort of structure and arguments to the regulators for years now. There's been no real shift. And there are other ways to achieve what people are trying to do. But it would seem at the moment, people are sort of stuck on this one idea. And I don't know if it's ever going to work because ultimately it falls foul of some of the SEC's rules. They've obviously got concerns. So, I think being a little bit more innovative in that space certainly has obviously a massive opportunity.
Could you talk more about what you're kind of referring to there?
I mean, I think that's obviously proprietary, and I think look, ultimately, I'm a believer in the sort of idea that if there are a set of rules laid out, that one can use those rules. If you're innovative enough to come up with a solution within the rules, and that's been our approach with the products we brought to market to date. UVIX and SVIX, which are 2 our VIX-linked products, many said could never be relaunched. They had a history that led people to believe that they would never see them again. We brought those back to market. The 2 times Bitcoin, many would have said would never have come to market. We did that, and we're hoping to do the same with the Ether first Ether ETF. And I think it's the next step is to use some of the similar innovative approaches to get to the spot product.
So it sounds like you don't think the current filings that are out there are going to pass muster with the SEC. They don't have a great chance of coming to market. Am I hearing that right?
I think that eventually something will come to market. And I think there's a lot of give from both sides that's needed. I think the SEC are becoming more accepting of crypto and are finding ways to view it in a way that's conducive to further development. But at the same time, I think there's going to have to be quite a lot of give in the crypto space around regulation. So with exchanges operating in a relatively unregulated space out there, I think that's uncomfortable for regulators. So I think there's some middle ground that has to be crossed from both sides to get to something that works. In my view, that if it stays on the present course, I think that's a couple of years away at least. I think getting a big exchange regulated in a way that the SEC and or CFTC are happy with, that doesn't happen overnight. The level of compliance that's needed, reporting that's needed, that's a huge lift. And I think up to now, the crypto world has been a little bit, I wouldn't say Wild West, but they've gone their own way. And I think drawing themselves into that compliance space is going to take longer than many might expect.
Fantastic. Well, this was a great discussion, Stuart. Thanks so much for taking the time and sharing your insights with us.
Thank you very much for having me.